Unlike probate estates, the only notice requirement in California that applies to trust is what's called a notification by trustee. A successor trustee, when a trust goes from being revocable by the creator of the trust to irrevocable, California law says the successor trustee must give notice to all heirs and beneficiaries of a number of different things. One, who's the trustee? Two, where is the principal place of trust administration? Is it Santa Clara County, for instance? Three, it lets the heirs and beneficiaries know that there's a time limit, 120 days from the time that this notification is transmitted to challenge the validity of the terms of the trust. And then four, it tells the beneficiaries and heirs that they're entitled to a copy of the trust. So it starts a clock running for a challenge point of view. It tells everybody who the trustee is and how to contact him or her. It tells everybody what venue, what county is the appropriate county, if any sort of legal proceedings need to be initiated. And finally it says, if you're an heir or you're a beneficiary, you're entitled to get a complete set of copies of all the terms of the trust.
Okay. Now, is there any notice required to creditors, or what should be done related to creditors?
Well, this is more federal law and California law too, but more federal law. We can't just avoid our creditors at death. We have to give notice. And so what we instruct our trustees to do is certainly advise any creditor of which they receive an invoice to give notice. If there is a bill that comes in that the successor trustee thinks is either improper or somehow or other in error, we'll work with that creditor to compromise any claim. Certainly creditors have a period of time within which they can file suit if their claim is not met. It's 1 year from date of death. We can shorten that period in an optional creditor's claim proceeding if we initiate certain proceedings with the court. We can certainly shorten that down to 4 months. But we typically only do that where we have some liability exposure, where we think that it might be important to try and shorten our period of time. Otherwise, the 1 year statute is generally what we rely on.
Okay. Now, aside from probate, and maybe I shouldn't exclude it, but aside from the notices that we just talked about for trusts, what other notices do you need to be concerned about?
There's a notice that we have to give to the Department of Health Services if the decedent was receiving any sort of Medi-Cal benefits during his or her life. We give that notice, we attach a copy of the decedent's social or death certificate, and the Department of Health Services will either file a claim with the trustee or they won't. They'll come back and say there are no funds due. There are other notices. We have to give some notices to the Franchise Tax Board. We have to give some notices to any beneficiaries who have been incarcerated in California that might be entitled to benefits under the trust, so that the victims of those crimes might be able to file a claim against that beneficiary's estate.
So some other things that I've encountered or thought about when I was asking the question is things like retirement accounts. So you need to. I'm talking about aside
I
from,
see. In terms of collecting the assets.
Yeah. And like IRAs, Social Security.
Sure. And that's not a formal notice that you have to give. That's just the process of collecting the account. So the successor trustee would contact the plan administrator of any retirement account, an IRA, Roth IRA, SEP IRA, pension plan, 401k, try to determine who the beneficiaries are and provide the custodian with whatever documentation the plan administrator might need. A life insurance company is going to want a death certificate and a trustee certification in order to release funds to the successor trustee. So with respect to collecting assets, every institution that you're dealing with is going to have their own requirements for proving who is the trustee and then entitling that trustee to collecting the assets that the decedent owned.
So another thing that I was thinking related to this is sometimes people are getting benefits. So for example, they're receiving their Social Security checks, they're getting their pension payments and so forth. So you have to tell the administrators so that they stop these payments.
Or
Yeah.
alter the payments. On
Yeah,
pension
yeah,
plans, typically
yeah.
a surviving spouse might be entitled to
Yeah.
a
3/4 benefit,
50%
yeah,
or
yeah.
whatever the plan provides. Where it's children, that plan benefit probably terminates, and
Yeah.
funds will have to be, if they've been paid out, will have to be refunded to the plan.
Right. All right. All right. Say I've got this living trust that I set up during my lifetime. Now, after a death, do sometimes those trusts create other trusts?
Oh, more often than not, they will create other trusts for a variety of reasons. Let me use a simple example. Mom and dad have 2 children. One is incapacitated, the other one is not. The estate plan might have created a trust for the benefit of the incapacitated child so that someone else will manage his or her investments, make sure that their needs are taken care of, while the well child might just be distributed his or her share of the funds outright. So the trusts that you're talking about are what we refer to as sub-trusts. They are trusts created underneath the master trust created by mom or dad or created by the surviving spouse. In more sophisticated estate planning with larger estates, we might do what's called generation skipping trust planning, where we actually create a trust for the lifetime of the child, and upon the child's death, to that child's children. So there are a variety of reasons that we would create sub-trusts. Certainly the first step in a post-death context is read the instrument, find out what does the trust instrument provide, because that's going to then guide the trustee in terms of this administration.
Okay. So we are getting down to the end, but I did want to bring up this question related to trusts about accounting. And so, for example, for my personal accounting, or some people's personal accounting, they may not even keep a checkbook. Or when they write their deposits, maybe they just put, deposit the total amount and so forth. Is that sufficient for a trust?
What you or I might do individually, we cannot do as a trustee. A trustee is a fiduciary, and as a fiduciary, they owe duties to the beneficiaries, and these duties include maintaining an accounting of all of the assets that came into their possession and control during their tenure in office as trustee. It also means accounting for every disbursement that's gone out. So in essence, every penny that comes in, Mike, and every penny that goes out must be accounted for. Now, a beneficiary or beneficiaries can waive that requirement, but before they do, if you don't have the books and records in place in order to provide this accounting, it can become very tedious as well as very expensive for the trustee personally to try and recreate the financial data upon which we're going to create this accounting.
So you may actually have to go back to the bank and say, I need to know what makes up this deposit back here.
Yeah, and when it goes back years and years, it can be a very tedious process.
And it may be impossible. So anyway, okay, so, and especially from my standpoint, for income tax reporting, I need to know what is going to be, in fact, taxable income and what is just a transfer, for example, from a different bank account.
Sure, transfer of principal versus receipt of a retirement fund, which might be subject to income taxes.
Okay. About 15 or 20 seconds, maybe you could throw out a final thought.
I guess my final thought, in having dealt with lots and lots of administrations of trusts, are they're not always simple. A good attorney can give you some terrific advice in terms of protecting yourself as a trustee. Be sure to seek that advice in a post-death context.
Okay. Bob, thank you again for being my guest today.
Pleasure.
Folks, I hope that you found this enlightening and thought-provoking, and I hope that, and be sure to get that legal advice. Anyway, and I'll see you next time on Financial Insider Weekly.